Before we even start this video off, I just want to give a disclaimer that if you have something to do in the next hour or two, I would not watch this video. Okay. This video is going to be very long and it's going to have a lot of information about what went on today. So if you're not ready to take notes or to binge this video for an hour or so, 40 minutes or so, then you can click right off, swipe. You're probably already gone. And if you're still here, good. We'll get started. So today's trading day was reflecting on yesterday's trading day, which was kind of pure consolidation, which was not really the best day to trade. And you know what? That's fine. We deal with losses and you know, it's fine. But what I want to highlight today is an important thing that I saw on NQ. On the daily time frame, we have this daily market structure shift that I don't have the PDRA marked here, but it was either a weekly, I'm pretty sure it was a weekly fair value gap that we hit over here in a daily. So weekly and daily fair value gap that we hit creates the market structure shift, and it's, in a way, it's a buy model. Obviously, we did not get the entry nor retracement back to that zone, but as you can see here, the zone or the range is still creating because we never got a break of structure. So in a way, this whole thing is currently forming a daily buy model. So if we want to see a buy model, we want to see this come down all the way down here into a discount array. Anyways, that's not the topic. The topic is the standard deviation of this market structure shift. As you can see from just this chart right now, if you want to take a picture, go ahead. From the swing low to that swing high, it had a range set out for us. You can see the -1 took out, -2.5 got taken out, and now we get into a range of -3 and -3.5. Now, anything above the -2.5 for me is call it done. You know, it's called quits. It's when I take positions or my take profits. My bad. Had a rough day today. Anything above that is what I like to just call the high grounds. So it's either we're not trading it or we're just watching it and we are maybe looking for a sell model for it to come back. We do have buying opportunities, but that, again, we're not buying, we're not selling, we're just looking. We're not actually taking the trades. The trade's already taken. We're not doing anything. Here on the daily, it's a little different. We don't usually take trades on the daily. We don't take entries on the daily. We're just kind of watching. And I'm in a bunch of other servers, and this is usually how I do my analysis. I just kind of go hop around and just see what other people, because there's other people that know how to trade way better than me, and sometimes their analysis helps me with my analysis. And as you can see, the -3.5 on the standard deviation on NQ was getting close to getting hit. As you can see on Monday, we almost took out the -3.5 or 3.25, my bad, which is the consequent encroachment or equilibrium or halfway point of this range on the standard deviation. That's a big deal. The fact that I hit it so nicely, so perfectly, that's a big deal. Came down. You can see we had a nice move back up. Now, the next level for me to target, for today at least, was a -3.5, not the 5, not the 5.3, not all the way up here. Actually, let's change this to standard deviation. Not the 5.5, not the 4, no, nothing up here. Just the next level over, because that's already a big deal. I mean, you got to reach far on NQ. So -3.5 standard deviation was our next buy side. Now, the problem with this, it's not really a high time frame PD array. This is just a prediction. Price doesn't actually have to respect this level whatsoever. It is just a prediction from this low in this market structure shift. It's saying that because of this market structure shift, this is the possibilities of the price going up here. Does it have to reach up here? Because theoretically, we can edit this to make it like 100. Price is never going to hit 100. Right? But it's going to hit some levels, and we just got to watch of when it comes back down. And we can mark those levels just like this and check them almost like a stairs, you know, it got past -3. Now it's going up to -3.5. So maybe if it gets past 3.5, it gets to -4. And that would be -4 for all standard deviation is like the turnover. Usually that's when the expansion move is kind of done, which would make sense for NQ and SPX. Anyways, on the daily we had hopefully, okay, no, that is not it. We had buy side liquidity on this high. As you can see, we just sweep right through that. I'm just going to put it back here. Let's dig deep into, or dig deep. Let's just go to the 4-hour and just look at the order flow. I just want to highlight, where were we? Wednesday. Okay, so we were somewhere over here. Okay, so I remember this. So on Tuesday, we ended the day off by basically trying to get to this all-time high. As we can see, we closed, basically, I'm pretty sure we closed right under it, or we swept it. So this buy-side liquidity was already taken out, okay? So no big deal. As you can see, it reacted off a 4-hour fair value gap here, which shows me what? It shows me bullish order flow, because price did not only did it not trade down to this fair value gap and fully sweep it. Yes, it came down to the consequent encroachment, but it closed above. As you can see in pre-market, or aftermarket and pre-market, it showed very bullish continuation. Now, this could easily sweep. This could easily reverse. Fine. You just watch. This is pre-market. This is London session. You watch. The New York session hits 6 a.m., right? And as you can see, just off looking at the 4-hour, you can see exactly what happened today. We went up and then we went straight down. Okay. So obviously the bias for today, or the order flow bias, was to be bullish. Okay. Just a reminder, the liquidity was here. So we basically, wait, how do I do this? Pretty sure it's like this. No. Like this. Wait. Okay. This was this was the expected order flow, right? From that liquidity point to the -3.5 standard deviation, right? How many ticks is it? So 200 or so ticks, I think. I don't know how to measure that. So it's not too far away. Really not too far. This was the -3.25 standard deviation up here on these highs. So yes, bullish order flow. What I was expecting with anything here, with any kind of move at all, is called a distribution retracement. So what happens, and this is basically also a buy and sell model, but what happens is when a stock goes up like this and it wants to reach for higher highs up here, what it's going to do first is go down and grab more buyers to then go up here, right? That's just how it works. But when you put it in a scale like this, even on the 1-hour, you can see it didn't really come back down at all. And to me, this was expected in a way, because I knew that price, if it was already bullish enough and we just came out of this choppiness, no way that it wanted to give up all of this bull run to like come down to the halfway, which is under these highs, which is already traded past. So why give it up and then buy everything back up? Because that'd just be more buying. So what I looked for was a 30-minute or even, a smaller range, which is the premium discount, just a small range for us to come back into. And let's actually see if we got that. So 1-hour again was bullish. Let's look at the 30-minute. I'm also going to turn on my kill zones because that's what I had before. As you can see here, we have Asian session for today, Asian session lows, and then we have Asian session highs, which just get taken out. And then you have the New York Open right here, or the New York Open, yeah, New York session open, or the day open right here. As you can see, price closed right above that, so we're still bullish. We almost hit Asian session, but this is end of the day. I'll talk about that in a minute. So what happened? So pretty sure I marked this swing low down here as the range on the 30-minute. This swing low was because of the Asian session, and I was like, okay, well, technically we started the day here, so the range would actually start here, but I just marked the Asian session. And then the high, I think this was probably on the 15-minute, because I don't think there is, let me see what this could have been. Okay, when was this? 8:45. Okay, so that makes sense. What I was expecting was Yeah, I marked this high right here as the 15-minute. What I was expecting is for price to come down below this equilibrium, and I think I got it wrong because I'm pretty sure it's not this swing low, it would be that swing low right here. Whoops. It would be this one right here. Don't know why it just did that. Okay, perfect. We'll just do it like that. And as you can see, I did get it wrong, and that's where I was wrong. But we still managed to catch the trade, so it doesn't matter. I was expecting some kind of move under the equilibrium here. And what I had marked out was London lows down here. I had London lows marked down here. So what I was expecting, I called this out in Discord. I was like, hey, I'm bullish. The price looks bullish. The order flow is bullish. I'm expecting a retracement during market open or 10 a.m., but I'm not expecting a retracement to the point where we're giving back what we just bought. So I'm expecting a retracement at least above these highs, above the previous swept highs. Okay, so I don't want this to go down to Asian highs. That I was not looking for to do that, and if it did that, then I'd be bearish. London lows were like up or down here, up here, like basically right here. Okay, as you can see, price, just turn off the kill zones. Price at what, 930, swept this internal high, came back down. Let's actually go down to the 5-minute because there's way more stuff to talk about here. And this is where we're going to get a little funky. So let me try to do this without messing your brain up a little bit. Oh yeah, no, London lows were down here. As you can see, I have London lows marked out here. And I had pretty sure this was a 15-minute fair value gap, if I'm not wrong. Might have been something down here. I can't remember. I don't really mark my stuff. But it was just a gap in the discount for price to hit for us to have a buy model if we're going to buy up again. So what I noticed was 5:30, right, market open. We have the 8:30 open, which is right, or the 8:30 open right here on that candle high. And this is important because this is going to be a target when we take this long. Usually, I mean, we could just say this is the target too, but I'm just going to delete that. 8:30 open is pretty crucial too sometimes. Okay, so what happened? Because a lot of stuff happened here. London highs get taken out. We trade up. Internal sweep. We come down. Saw this completely live. Took this out. As you can see, we took this out. Okay. And I understand how some people might have thought that we could go short. And I personally didn't see a sell model because guess what? I wasn't looking for a sell model because we were in a bullish order flow. So why would I look for a sell model? So again, this comes back to my my previous video of not knowing the high time frame order flow. Once you can sync up those time frames to a one order flow, bullish or bearish or consolidating, you can take trades very, very easily. Not saying it's easier to trade, but I'm saying that if you're looking for sell models in a bullish aspect or bullish narrative, it's gonna be easy to find, sure, but it's not gonna work because everyone's buying and you're the one selling. So you're the liquidity, right? And that happened to me yesterday. So to be honest, there's absolutely nothing wrong with that. Everyone needs losses to learn. What ultimately I was watching was these equal lows down here, which was created during, no, not London, basically New York pre-market. So that came down, but I was also looking for price to come down even further and hit that London, which at the time, right, I thought that, oh yeah, this was the equilibrium, right? Because we had our range here previously. So I was like, oh yeah, if it comes under there, we're buying. But as you can see, the actual range that I had wrong, the equilibrium was here. And what happens? Oh boy, I just love ICT. Let's make this a bit bigger. Yeah. Let's make it red. Oh my God, no. Wait, that can't be right. It sweeps equal highs or equal lows after the 9:30 open, and then it hits the discount range of the morning session and then buys everything back up. Wait a minute. That cannot be right. No way. I'll tell you right now, I don't think Fractals caught that. I don't think Fractals knew about this. And if they did, good for them, but I don't think they knew about that. Okay, so what I write here, I said 8:30, went over that. 9:30 open, first 30 minutes of the session. So yes, I've made a few mistakes before of trading before 10 a.m., but usually the first 30 minutes of the session when market opens is the most volatile, the most risk-worthy thing you could ever do. Usually people trade, oh yeah, if it goes down the first 30 minutes, it's going to go back up for the rest of the day. Well, you can see it did, but guess what? For the rest of the day, it came down under. So your analysis is not fully right here. You can see we swept those highs. We came down. We swept all this. You might think we're bearish because we swept all this. Boom. Next thing you know, we're bullish. And all that was needed for you to be wrong was one little tiny analysis that you missed because you either didn't know or you're oblivious to it. And for me, it's mostly oblivious. I don't mark it. Okay, let's talk about this trade entry though. On the 5 minute, there's not too much to talk about. Buy model on the 1 minute, 5 seconds. It didn't sweep London lows, but that was wrong because I had the discount wrong. And 2.5 target right above buy side. Yes, we'll talk about that. Let's go into the 1 minute where I looked for a buy model. I'm kind of doing what Harley is doing in my Discord. If you guys are in my Discord, go ahead and please join. We just hit 100 members literally. Wait, where the fuck? Wait, give me 1 second. Oh, I know why. Let's just do this. Visible on our intervals. There we go. Yeah, if you guys are in my Discord, please go join. Just hit 100 members literally today. And I took this off Harley where he explained that he would go from time frame to time frame, every single time frame, find the order flow, and then he would mostly take his trades on the 1 minute because that's usually where the structure is formed, and you can see the price action there. This was a little different. This was my first time like looking at the 5 second chart, and I'll explain it in a second. But what we have here basically is that morning session or 9:30 open 5 minute like gap that we create here, which yes, you could go short off, but again, this was a retracement to the displacement, and we'll talk about it. As you can see, we hit those lows. I'm not really going to talk about that. It dispersed higher. Now on the 1 minute, you might think like, where the fuck is this market structure shift? It just looks choppy. There's a bunch of candles. I just don't understand how it works. What is going on? Okay, if you focus in, what I like to do is go from the swing low and then work our way up, right? So when the swing low happens and I see displacement, I'm like, okay, well, if there is going to be a market structure shift, where is that swing high going to be? And we're not only looking for a swing high, we're looking for a, up here, intermediate term high in a buy model. Now, what does that mean? That means that when this displacement happened, you can see that we created a fair value gap right here. Boom. This high that was created above traded through this fair value gap and made a lower high. And then from that lower high, it created a lower low. Lower low. So that's our lower low. That's our higher low, or lower high. Holy shit. So where's our market structure shift? Right here. On the 1 minute. Okay. Where do price, so price pierces through the second candle. So this is good. On the second candle, it pierced through the market structure shift. Doesn't close above. I like to see it personally close above. So yes, if you consider this a market structure shift, you would have drawn your range. You would have entered on probably on this candle. 100% correct. That's fine. It works out for you anyways. You're not going break even. Your stop loss not getting hit. Close, but not getting hit. That's fine. Personally, I didn't see it like this. I wanted to fully see it sweep all the way through because if you even look on the 2 minutes or the 3 minutes, you can see that it's all wicking. So to me, it's not very valid when it just wicks on the 1 minute for a few candles. Where is it? Right here. So I'm waiting for another candle to break. You can see it comes down, comes up, comes down, consolidates, and then we have this gets bought right back up. And then to me, I'm like, oh yeah, I should have entered. I lost. I missed the entry, but no, because we didn't have the valid market structure shift. So I drag it out. Where does it close? It closes here. Okay. And the point that makes it valid is that there's no candle here that trades under this low or that closes under this low. So this is still a valid high or a lower high. So we close on this candle. Okay, cool. And so now we have to create the range, right? Where's the equilibrium of this range that it's about to create? What I'm looking for is price to obviously trade to either the consequent encroachment or the top of this order block, or you sweep this fair value gap to come down. So the range is obviously going to be from this swing low to somewhere in the range. So, consequent encroachment here, wherever it is. As you can see, price came up, you're marking it out while it goes. I'm actually going to do something prettier so you guys can visually see. I'm going to do this. The top of the range was here, obviously, and then the bottom of the range was here. Just so you guys can see, I didn't have this on my trade, but just so you guys can see the pretty colors, we have the premium up here and the discount. What's good about this is the market structure shift is in the premium, and then everything else is in the discount. So now you're looking for PD arrays or just arrays or discount arrays to enter long. Now you might be asking yourself, French Trades, how the fuck did you find an array on the 1 minute? Because I don't see a fair value gap. I don't see an order block. I don't see shit. It's choppy on choppy on chop. And to say that, I agree with you. I completely agree with you. It's choppy. So what I did was, okay, I went to ICT's live stream and I was like, wait a minute. I remember he used the 15 seconds for an entry. Let's go to the 15 seconds. Have to go all the way back, huh? Let's see what the 15 seconds offers. No, the second trade. As you can see here, market structure shift in this displacement that took out, usually you look for the candle that took out the actual market structure shift, but as you can see here, this was already traded through and this was not the low. So I went from the low to that, thinking that this was just one big candle. So in the displacement, is there anything here that we can notice? On the 15 seconds, yes, there is something here. So you can even mark this out. But look how tiny that is. That's not very big. It's not very big. So what I did was I went to the 5 seconds. Sorry if my throat sounds a little bad. I'm pretty sure I'm sick. Try to make this quick. I'm sorry. God damn it. Where the fuck are we? Getting lost over here. Where's it? Oh my god. Okay, 5 seconds. On the 5 seconds, I saw this singular fair value gap from this displacement up. This is the only fair value gap that I saw. So I marked it out. And sometimes you just have a gut feeling. You look at this candle, and this is the moment I knew this was it. This candle pierced through this, closed above, tapped back into it, and had a bullish retracement, which formed the market structure shift and the valid market structure shift on the 5 minute or the 1 minute. So I knew that this 5 second fair value gap would have to do something with it. As you can see, all you do is you wait. You wait until price comes down. If it doesn't come down, you just draw a bigger range. It's going to come down eventually. And if it doesn't, it doesn't. Then you miss your entry, you're good, get out of the charts, you're fine. Find another entry, not that one, okay? Done deal. Price comes back down. I'm going to go back to a 1 minute chart for entry. So a 5 second fair value gap. In the back of my mind, I'm like, okay, this definitely will never hold up. And as you can see, when price came down all the way here and it like passed this gap or this low, right? I was expecting this low to somehow get touched because this was not an entry model. It just didn't hit any array. So this was definitely something with, no, that can't be. This was 9:45. Wait a minute. Wasn't this? Uh-oh. This was news. Well, how does that line up? No way. So you're saying in the middle of a buy model, news hits, it comes down, doesn't sweep the lows, but it comes back up. And then you're saying that on this entry model, price not only touches the 5-second fair value gap, but it comes down to the news low, taps it, closes above the 5-second fucking fair value gap, and shoots up. Yeah, I mean, how the fuck do fractals work at this point? Like, you can't catch this on fractals. You can't come up with this on fractals. And I'm not hating on them. I love fractals, but the closure of these candles tell a whole different story. Again, this is the news that came out at 9:45. Was watching this live. Flash marking or just PMI in general. Very bullish. Extremely bullish. Okay? Big thing to worry about. As you can see, if you entered off the consequent encroachment of this fair value gap, like anything I do, consequent encroachment, your stop, I had my stop. Well, I don't know why. Where did my stop go? I don't think I had my stop at these levels. No, I'm pretty sure my stop was at these lows. Your stop is incredibly small. And to be honest, this is not very, yeah, I mean, it's right there, you know, it's almost got taken out. But it's very low risk because when you're on a funded account, this probably takes you out like $100 or some shit, maybe 50. So it's a lot. As you can see, price obviously comes back up. Now, what we do create, which is nice, is like a sell side of a curve. So there's liquidity up here that's resting, obviously with these highs that just created. Probably a 5-minute market structure shift. You're probably thinking maybe a 15-minute, right? Because the swing high, internal high, and then low. But we don't completely create a swing low, so it might not be a valid market structure shift. And then guess what? There's more to it. First liquidity, first TP, and then the second TP would be here. Now it doesn't line up with standard deviation, but the second TP is before our final TP up here, so this is fine. And guess what? We have equal highs here. This is the 9:30 open high, right? When we sweep these highs, and it's also the 8:30 is right up here. So 8:30 high, 9:30 high, liquidity, lots of liquidity resting right there. As you can see, even on the 1 minute, we just kill through that. We kill through that and we use it as support. And that from there, when you're seeing this live, from there, if you have those marked out, you know, and you should know that the market wants to go higher. It just broke out of this 930 range that I just created. Standard deviation is at the moment correct. This 5-second fair value gap got respected. So if it was bearish, it would have been absolutely ran through. And I mean ran through. Imagine putting a penny under a train track and the train just goes right over it. That's exactly how it would feel. Your position would just be gone in a matter of seconds. But the fact that that 5-second fair value gap held up tells a whole nother story. The fact that these 3 wicks, respected the 930 high and used it as support tells a story. The only thing that doesn't tell a story is this high. And I will be completely honest with you. I'll be completely front forward. If you're still here, you're gonna notice something that everyone likes with me is that I'm 100% honest. I will show you my prop firm executions. Okay, so they just deleted because it's the end of the day. Fuck, dude, I should do this video earlier. Anyways, I had executions up here. I bought. Yes, I bought up here. I didn't have a strategy. It was just, to me, it was continuation. It was going to go to the highs. It was clear. It was just going to do one big run. Boom. Now, I will give fractals kind of like a shout out here because they did call this out. They did catch the very top. That's how fractals work, I guess. I don't know. The only thing that caught me off guard is really, at that time, I was in class. I came back and I was not looking, but it was above the -4 standard deviation. If you know anything about that, and what I just talked about, is anything above this is kind of like a turnover. Anything above this, you can expect some kind of turnover reversal because it's the last leg of standard deviation, in my opinion. And what I've seen other traders do is they stop after -4. They just watch price. And you can see it gets above the -4.5. And then it gets almost to -5. Doesn't touch it, but almost. I'm not going to count this as a level. And it reverses. Fractals caught the top. That's fine. But I want you to understand, fractals went short, but we went long for the whole day. Okay? Because guess what? This was a retracement to the displacement. Okay? Because guess what? I'm going to say guess what a lot. Swing low to that swing high. Oh my God. Or actually this swing low. Where's the equilibrium of this range? Where's the discount of this range? Please. Where's red? Yep. No, you're right. That price action down there is in the discount of the displacement. What does that mean? That means buyers can start buying. And guess what? We just hit too. Remember that 930 high that we respected? Well, I'm going to keep that there because that gets respected too. Oh, sure it does. Oh, yeah. You know what also gets respected? This 1 minute fair value gap that you barely can see. That also gets respected right there. Whoops. I'm not sure I'm going to draw this out. Hold on. That gets respected. Yeah, I don't know. I guess I was wrong. Oh. 1 minute institutional order block. That gets respected. Yeah. No, I guess like ICT is a fraud, and I guess like his concepts don't work. I guess like he just sucks, right? I guess what you're seeing on a chart isn't like meant to be, you know. I guess it's just ICT is a fraud, you know. Price respects the discount arrays to go higher. Let's talk about the second trade that you could have caught. Again, we're still looking for a buy model. You know why? Because we've just created more engineered liquidity that is right there. You remember that blue line? Guess what it is? Our ultimate target, that -3.5 daily standard deviation. That's our target. That's where price wants to go, and that is where it will go if it shows that. So, what was I looking for? Displacement with a retracement. What do we look for after that? We look for another buy model, because if it's going to retrace back up to the highs or displace up to the highs, it's going to want another buy model. So that's what we're going to look for. Did we talk about this? Yes. Okay. Let's talk about this. Let's go to 5 minute. See what's going on there. 5 minute. You can see just off this fair value gap, it respects the high, order block, fair value gap. And it's in the discount, so it's going to start buying. We want to see buying pressure. Cool. 5 minute respects that. You can see we get buying pressure. 5 minute does not create. It does not create a market structure shift that we can take right here. It does do here though. Right, we do create here, but the thing is that there's no. Whoop, what did I just delete? Wait, why did it delete it? Okay, it's kind of weird. It creates a market structure shift here, but like I said, I'm looking for a 1 minute entry because this is going to be tight. I know that the 5 minute probably doesn't have the time to come back down, whatever this and that. So I'm looking for a 1 minute entry. I'm hoping for that, right? So 5 minute shows bullish price action. It doesn't quite close above that high, but that's okay. Go to the 1 minute. Now we're not going to go on the 15 seconds again. Trust me. We're just entering on the 1 minute. It's fine. This is going to get a little more technical because this swing low here didn't fully, I mean, yes, there's an institutional order block here that it respects. It sweeps it. So that was like the target itself, but what I was really looking for is that 1 minute fair value gap and that resistance here that it like in a way closed above on the 5 minute. So that's what I was looking for. This was kind of like experience, right? I just knew that this doji, just the way it got bought up was enough for me to tell that this wanted to go higher. It's easy for me to say that, to be honest, but during live markets, I wouldn't say shit. Let's just be honest. It goes up, it goes up, it goes up, it goes up. Notice that the only candle that goes through this 1 minute market structure shift, again, is this valid? Yeah. What did we create here, by the way? Intermediate term high. Bearish fair value gap. Bullish model. We're looking for a lower high to get created inside or outside or whatever to enter a fair value gap or to trade inside a fair value gap, bearish, to make a low for that high to be broken. Oh no. Isn't that exactly what we get here? Isn't that exactly what we get? 1 minute market structure shift gets created on this candle. It goes high, goes high, goes high. It trades into what? A 1 minute SIBI. Consequent encroachment of that SIBI. It's probably tapped right into it. What did I say? Tapped right into it. What's the range? Swing low, swing high. Wait for break of structure. With this small displacement, as you can see, there's a lot of wicks. I'm looking for anything under the consequent encroachment, negative or 0.5, which is right here, the range. Just looking for this, right? So everything above here, we don't care. Everything under here, we do care. Now, what do we notice? The only fair value gap that gets created there is this singular 1 minute fair value gap. I don't need to go to the 5 second because the 1 minute has something there to enter. So for me, that's enough. We also have like, I'm pretty sure this was a 2 minute or like a 3 minute order block. This was a 2 minute order block. So I marked the top. You should actually mark the top like this. So a bullish order block, as you can see here. Let's go to the 1 minute. Let's see how that reacts. So price comes down. It comes down into what? The discount array or the discount range of this displacement to retrace. Retraces into a 1 minute imbalance. It taps into a 2 minute order block, bullish order block. Does not trade past it, does not close above it or under it. And we respect our stop loss. Now, our stop loss was a little out there. But again, this is the 1 minute, so it's very volatile. I'm willing to take that big of a loss, especially if the order flow is wrong, which it most likely could most likely be wrong, and I would take that loss. And then we go. Now we do tap, yes, we do tap back again into this fair value gap. Maybe it wants more buyers. Maybe this just wasn't the move. That's 100% fine. But as you can see, price, again, doesn't close. It doesn't trade down to these lows. So these are now protected lows, right? Mark it out right here. These are now protected lows. What the fuck? Protected lows down here. So if these lows get broken, then we know something's wrong. Doesn't get broken. And we move higher. Now, the target on this one, and I'm pretty sure, let me pull up the Discord because I'm pretty sure I had this. Hold on. NQ. Okay, this. Right? Pretty sure this was, no, this was, no, this is not it. This was the 5 second one. Okay, I don't think I updated you guys on the other one. My bad. Okay, never mind. I didn't update on this one, but I took this during lunch, I'm pretty sure. Yeah, I watched this during lunch. The target. Okay, you can see that right here, just right off the bat on the 1 minute. It's very easy to tell what your targets are, just looking at this. It's already a sell side of the curve. You have 1, 2, 3. 3 take profits already set just for the range. What did we ultimately want, though? What did we really want? The negative 3.5 standard deviation on the daily. That's what we wanted. And that's what we got. And guess what the internal 1 minute standard deviation told us? That the range itself, or the predicted price action, would come up to the negative 2.5. Are you serious? How close is this? Okay, why is it down here though? It's barely $2. $2. That's all I needed. When price traded up to here, which is our take profit, our final take profit, the only price I would need was that little tick up. Boom, boom, one little candle take out the negative 3.5 standard deviation. So that's what we targeted. Beautiful trade, beautifully worked out. This isn't the beauty. What is, to me, the beauty of this trade is down here. This is where it really matters. Because if you can understand, and please make sure you listen to this. If you can understand how the market moves in certain times when it's doing something it wants to do, you will notice a lot of fucking patterns. And just in this example, you can tell it's already bullish on the 1 minute time frame because of this 1 minute fair value gap that it respects 1, 2, 3, 4, 5 times where they tick to the order block to the dot. 5 times order block. That's all I have to say. And then what? We had our level for the day. And then what? And guess what? We sit back and we see what happens. And what happens? What happens? It comes down, you're off the charts. Maybe you're on the charts, you're watching this. What happens? Yeah, it sold off real fucking quick. Sold off. Now, it didn't make a mistake here. I thought that it was going to go up again, but it didn't. And this was on this was traded demo, so I didn't trade this, on a funded account. This was demo. Just to make that clear. I thought it was going to be another buy model here on the 1 minute. As you can see, again, internal or intermediate term high here was created off this fair value gap, swing low, PD rate. Only thing about this PD rate is that it didn't fully get traded through. So I was kind of suspicious on that. Anyways, candles look good, right? The price action looked bullish again. We did get the market structure shift, and the only time we actually got the entry, and this is where I really don't like it, is even when we draw our standard deviation up here, you can see that the negative 2.5 is right on these highs. So to me, that seemed perfect. The negative 1's right up here. What I didn't like was this move up here. Usually on the 1 minute, what you're looking for is just look how big this move. I'm just going to take this, copy, paste. I'm going to take this. That's how big that range was. Let's compare it to this range. Notice how this range is almost not double the size, but it's almost like 1/4 of the size, if not just like a candle or two above. That's a lot, especially on the 1 minute. That means like the 5 minute was a huge candle. Yeah, huge 2 candles. And you know what? With experience, and I should probably know this, it's going to hit a fair value gap if it wants to come up so fast. And guess what it did? 1 minute SIBI right here. Boom. Consequent encroachment. Hits right there. Personally, I didn't have this on my chart, and I'll be honest, I didn't have this on my chart. I did not see this. And this might be a little, mistake that I did because I was so focused on the buy model. But to be honest, it was a mistake in the first place to trade anything after it hit this level. I should have just closed my laptop, be done for the day. Because the moment it hit our daily level, why would I be looking for buys again? We've already gone through everything. We're tired. The stock does not want to go back up. It's done for the day. We're good. Why are we going back up? French, you don't need to trade anymore. You're good. You're fine. You did 2 trades, perfectly done, beautifully executed. You don't need another one. You're done. Why are you trading again? But again, let's just look at what happened. Market structure shift. As you can see, the range was a little bigger. Very big range. Black range. Equilibrium. I didn't like this. Equilibrium usually is under the market structure shift. And as you can see, it's just way above. Way above. On the 1 minute, there's no fair value gaps here. No fair value gaps. Nothing that I personally marked. Okay. So right off the bat, the 1 minute has nothing. What I do, maybe I go on the 5 seconds. Is there anything on the 5 seconds? Maybe we should go to 15. I think I went to the 15 on this one. It's up here, right? Yeah. So again, we're looking for imbalances that have a play in distribution. Nothing. Nothing. I'm not even sure why I took this trade, to be honest. Yeah, there's absolutely nothing. Nothing. But I took longs, and as you can see, we just completely got shorted. I wish I could show you the executions, but I guess the funded account like updates at like 8 p.m. because I recorded this yesterday too, and it wouldn't show executions. But guys, I promise I took a loss on my funded. Like, I'm going to say it right here, right now. I took a loss. I took another loss on my funded. Yes, I did. I'm being honest. I'm being truthful. Price comes down into the London lows. I had a alert set. As you can see, it comes down to London lows. It trades into the discount array that I previously had marked out, but it wasn't really, I mean, it was discount. As you can see, respects it. But again, we're in a bearish order flow. It is 345. We're going to go back down. We're going to close down. We know this. Asian lows. Oh my God. I mean, it's right there. Why not just take it out? Why not just, it didn't take it out. It didn't take it out. Fucking bitch. It didn't take it out. But overall bias today was correct. The overall order flow today was correct. And the main lesson that I learned was that we didn't make a lot of mistakes when we followed to our rules. The model itself that I'm trading, yes, is the ICT 2022 model, which is the buy and sell model. But I personally have changed it in ways that I understand it better. And sometimes I would use the OTE, sometimes I wouldn't. Now I'm more kind of inclined to imbalances in the distribution because right away, it just shows you if there's already imbalances there, it wants to rebalance those imbalances. I know I'm saying a lot of weird words right now, but if the price is creating imbalances in the market, it's making that to be reimbalanced. But if it's going straight up and it's not creating anything, why would we want to come back into it? And if we do come back into it, there's nothing to rebalance, so we go right through it because there's nothing there. Nothing for us to take. Okay? Today was a good day. I can't really hope for tomorrow. We just have to hope for the best, yeah. And I hope you guys have a good trading day tomorrow. I will be posting more updates on this, and I'll probably do like a daily recap or whatever on the Discord. If you guys have not joined the Discord, please do so. It's in the link in bio. If you can't do that, then I'll send you the link in the comments, but join up. We're about to hit 150 members, right? So let's go get it. All right, peace.